Alright guys, welcome back to my channel. Today we're going to overview my personal take on the future of cryptocurrency, and you could hear my mental framework, and that way you could decide on whether or not you think I'm wrong. If you think I'm wrong, you can tell me in my Telegram group that I'm starting. The link is below the video. Otherwise, I'm just going to jump right into this. Okay, so this is the dominance of Bitcoin, and this is why I think that a better strategy, this is what I think is going to be the future. You know, obviously no one can see the future, but this is my take on it, and this is where we are today. And you can see that Bitcoin dominance is slowly, and then it has this big drop off, has a return to the mean, and then continues. And that's, I think that kind of thing might continue into the future. Is the Bitcoin dominance in the total cryptocurrency space. And the reason I think that this is happening is for several reasons on which I will get into. But the basis of that is something called the division of labor. If you read economic books, or even, you could understand from the name, division of labor just means that you have some workload, and then the amount of people that is, divided by the amount of people equals, like, if there's 100 people, the amount of workload is like 1/100th should be handled by each person, if everybody handled the workload equally. So in how many people are working on Bitcoin and how many people are working in this others category, the others category. The reality is that when you're an investor, you're trying to capture that workload, that future workload of people. As people add value to something, that's the market tries to predict, like Tesla, it's, obviously Tesla's going to be a major role in the future. And so the market, shoots up way before Tesla's worth that value. Things like Netflix, the value of Netflix is much higher before it realizes the value, then it captures the value. And often after it captures the value, the market can stagnate, go sideways, go up slowly if it's slowly growing, or drop. But in many cases, the opportunity for an investor is where the market doesn't understand where there's going to be future capture of value. And to me, that's the others of crypto. I still believe people are delusional about this. They think that there's many people that think Bitcoin's going to be the only future. I'm not one of those people. I think that this others category is a far better place for you to put a diversified position, because you want to capture this. You're not going to capture it by any particular crypto, but you are going to capture it if you have a well-diversified, well-researched position, and you could see this massive gain that's going to happen when the others overtakes dominance. I do think that when this crossover takes place, there will be a change in thinking of the Bitcoin maximalists. They will have to change their narrative once again. In the past, Bitcoin was seen as cash, then it was seen as a store of value. The question will be, what will be Bitcoin's future narrative? I don't pose anything. Bitcoin is part of my portfolio. It does represent a substantial part of my portfolio, but I don't know what that's going to mean for Bitcoin when this really does happen. Maybe I'm wrong. Maybe Bitcoin will be the largest. Will do this, but I doubt that pretty strongly. Okay, and the reason why I think investing in crypto can make you rich in a generalized sense is this is only for tokens that represent control of or represent ownership of a network. That's one of my criteria for a lot of my crypto investments is where the crypto itself represents the future management or the future value of a project. But in a generalized sense, why crypto will make a lot of people rich. Okay, so it's basic mathematics. If you own a section of a company and that company grows, your profit is this big section here. Okay, so you imagine this circle as the market that a current project holds. As the project moves to expanding out and capturing more of that, the market, it grows larger. And you want to get in here, you put in your value, you own your percent value, and you get that exponential return. It's mathematics. The amount of growth for a business is squared. And that's why, investments in small companies, this is where capitalism really shines. This is where capitalism is supposed to shine. However, in countries like the US, they have disastrous laws that don't allow for people to invest. They call it accredited investors. They don't allow people to invest in small startups. This is the most ridiculous laws I've ever seen in my life. This is the reason capitalism isn't working for most people. But it's supposed to. Capitalism can work for most people. And where it works is when people are young, they're supposed to invest in projects that have small markets and they can capture large markets. And they can realize that squared value, that exponential growth in their funds as that company, that well-researched company, captures market share. So the reason crypto is definitely going to make a lot of people rich is the entirety of crypto, those others, is going to grow by over 10,000x, okay? And the reason that is because all the world's assets are going to move in the cryptocurrency. There's never been an opportunity like this in the world. So it's like this tiny little market. And if you own this little sliver, it's going to be massive in comparison. Like you can see, it's going to be massive compared to that the amount of growth that you're going to realize is going to be quite massive. So, like if you were to have that little sliver, it would look like nothing on this, and this would be all your profits as the cryptocurrency expands out. So a well-diversified position is going to capture some of this growth. Crypto is the best place to be for growing your wealth. Okay, so as far as trends go, this is a generalized view of all the different market segments. You have the financial, energy, resources, and industrial, technology, media, communications, consumer, government and public services. This is I put as a wild card, and life sciences, which is like healthcare, which I think this one's going to be big in the future. As of right now, it's not so much, but I'm not going to get into that in this video. So you can see that I have things like real estate, investment management, insurance. All of these things are going to be completely overtaken by crypto. Crypto's made for this kind of stuff. So this is just the mindset for your diversified position. You're going to want pieces of all of these. You're going to want to make sure you have investments for all of these in the crypto space. Ones like this are going to probably come later. Ones like this are very much unknown. But things like, that you could see like starting to form. You want to have positions in all of these to make sure that you have a well-diversified position so that you actually capture this massive growth that's going to happen in the future. So why is this happening? Why are we seeing Bitcoin's dominance lose? Why are we seeing the alts start to take over? One of the reasons Bitcoin, in the next part, this is part 2, I'm going to explain interoperability, and I'm going to explain something called like governance and the consensus models. But in a basic sense, the narrative in the past when crypto first started was that there would be one blockchain to rule them all, and that would be Bitcoin, or that would one blockchain to rule them all, and it would be Ethereum. But that is completely gone now. If you're a person who's looking at this logically, you're going to realize that there's many different projects that are going to be interoperable and play together. But part 1, why is this happening? Miners control Bitcoin. That's a proof of work consensus model. And they vote to maximize their profit, not adoption or increase in price. That's just a fact. Or at least so far, that's been the case. And their incentive structure looks to be that way. So that they have short-sighted behavior. They have lack of scalability solutions, lack of market expansion solutions, and the reason Bitcoin has growth is because it was first mover. First mover is definitely strong, and maybe that will be enough to carry Bitcoin in a dominant position in the future. But regarding those incentive structures, the miners don't vote for the right things. And here's a real world example. So you might, in defense of Bitcoin, you would say they want to expand Bitcoin because their business model depends on Bitcoin having value. So my response would be, this is just from history and what we've seen so far. Upgrades come up to increase efficiency of Bitcoin 50%, leading to short-term drop in miner revenue, like increasing the Bitcoin block size. Will they vote for it? We've already seen that they do not vote for it. They do not vote for things that cause Bitcoin to capture market share. So that's why the management is off for Bitcoin. We have seen, we only have real world examples to go for this, but like I said, it is possible that the miners will change that direction in the future. I'm not bearish on Bitcoin. I'm just more bullish for the altcoins, and I do hold a substantial position of Bitcoin. However, if I'm thinking for, if you're someone who's small and you want to grow massively, you want to have that well diversified position. So here's another comparison directly. So proof of work versus governed proof of stake tokens, where the tokens themselves represent direction of or ownership of the platform. This is the difference that you will see. So this one, they vote for things that increase miner profits. With this one, they vote for things that increase price. That's what we want. We want the token to increase in price. And so we want the token to help in that process. There's very little upgrades for proof of work systems because it's difficult to get everybody to agree on things. However, we have seen on Ethereum, the proof of work has been panning out. The miners have been collaborating with the GitHub repositories of the main developers. So, it looks like it's carrying somewhat. But however, this one, the decision process for upgrades around price performance. You will, because the token represents ownership, the decisions are around the idea of price performance. That's what they want to see. In these models, many of these models, the fees go to developers. Because the fees are a lot smaller and it's far less computationally expensive, a lot of those fees go back to the users and the developers. So it's a much more efficient governance model. That's the reason Ethereum's moving the proof of stake, because they know this. They know that the fees should go back to the community, should go back to developers. In this proof of work model, the users are spending out this money. It's money leaving, it's value leaving from the user in the form of fees, the users, Bitcoin transactions. The value leaves that system and it goes to the miners, and they sell it on the market or whatever, but it's leaving those who use Bitcoin. So it's like everyone who uses Bitcoin ends up spending all this money that doesn't go back to the ecosystem. And mining is what represents ownership of the Bitcoin network, and thus mining represents governance. So the token does not represent ownership of the network. That's the bottom line. The token doesn't represent ownership of Bitcoin. Bitcoin is just a byproduct of mining, and the miners keep it alive because selling Bitcoin helps keep them alive. So all this value from the users, all this value from the fees goes back to the users of these projects because the token is used to validate the network. So token represents ownership of the network and thus governance. You can think of the Uniswap token having value, even though it doesn't pay dividends yet. It might in the future. But the only reason the Uni token has value is because it's representing a voice in Uniswap. Okay, so reason number 2, why are we seeing this happening? Why are we seeing Bitcoin lose dominance? Why are we seeing the alts take over everything? One of the reasons is interoperability. So you have this huge workload of these future markets. As this market expands, it goes from tiny to huge. There's going to be a massive workload for capturing the world's assets. Right now, Bitcoin and Ethereum could barely handle anything. But what we're seeing now, I personally believe that we're going to see the biggest bull run in the history of crypto this time around. I really believe that. And the reason why is because now we have something called parallel processing, parallelization. And I'm a programmer. What that means is you have some amount of throughput, but we're moving to multi-throughput. And that's Polkadot. That's that Polkadot system. That's some other projects like the Cardano project. They have parallelization of workloads. So that means we have scaling. Scaling is finally solved. And it is solved. It really is solved. It's being implemented now. Not in the future, but it's happening now. And so this huge workload could be handled by projects. And what they are is here's Polkadot. Now you have this interoperability means that if you have a blockchain here connected to Polkadot and you have a blockchain here connected to Polkadot in this interoperable system, they benefit from each other because they all communicate in this workload. And then some of these projects could actually be, these parachain slots can be the same project. So these two might be two parachain slots, but they would share half the workload of their total throughput, each other, thus representing that throughput. So you can have something like Polkadot, and you have all these parachains, And what that represents is multi-threaded throughput because they have this intercommunication. So Polkadot has helped with solving the scaling problems. And you could see the interoperability, intercommunication, they benefit each other. So another narrative, another thing that's happening that's going to cause this to be the biggest bull run in the history of cryptocurrencies, in my opinion, is that in the Ethereum ICO, we are now moving to the dot parachain offering. And the coins have little function and exist in isolation from each other on the Ethereum network. So they don't really communicate. They can't communicate. It's not natively built into Ethereum. However, and the projects that are launched on Ethereum, they were funded by ETH tokens. They were more like a parasite because you would send Ethereum to those projects, and they would sell the Ethereum into the system to fund future development. And Ethereum didn't natively benefit from those, whatever values they built into those tokens, because they didn't have that interoperability. So it's mostly a sell pressure function. However, coins on Polkadot, they share and communicate the network effect. So anyone who the DOT becomes more valuable, and projects on the DOT system become more valuable as more projects are launched on it because they intercommunicate. They get that network benefit. This guy has some value here. This guy has some value here. This guy has some value here. Each new thing that brings a different piece of value to the Polkadot system now adds its value into this pool because they all intercommunicate. So it's this network effect, this effect that will benefit token holders of DOT and even the projects on DOT. It's a network effect. It's much better structured to benefit price-wise. And the DOTs are used to lock up slots, and the network of DOT goes up. Yes, there is a sell pressure for DOT when you fund projects by selling DOT to those projects. It's the same effect of selling Ethereum for Ethereum offering. However, DOT has things to counteract that negative pressure. So it's in a much better position to realize price gains from that. And this works for any interoperability project. All right, guys, that's my overview of why I think that we're going to see this trend happen in the future. I think that we're going to see, just from the division of labor, that we're going to see the alts as a better place, the others as a better place to a well-diversified others position, I think is the best bet for capturing value. So if you like my content, please join my Telegram. I just started it. There's no one in it now because I just started it. But what we're going to do in the future is we're going to do a community poll of the next reviews. I'm going to play a devil's advocate role because I don't like most projects, and you shouldn't downvote my videos to hell because I have a negative review or because I have a different opinion than you. What this is you present your well-structured arguments. I don't want you, if you're a type of person, to be emotional. I want you to be a person who brings well-structured arguments. There are going to be differences of opinions, and that's good. Hopefully we can learn from each other. That's the point of this. So most projects are junk in my opinion, but hopefully you can help change my opinion on things, or maybe I can change your opinions on things. We can grow together and reach conclusions based on fundamentals and come up with a correct model, an unemotional model. I keep my emotions out of my investments. My emotions are for other places in life, not my investments. I want to perform. I need to perform. So I keep my emotions out of it. So in my Telegram group, you're going to be the first to hear my conclusions, and you'll have direct interaction with me, and we can help each other improve my model, and you can develop your own model, and we could learn from each other. All right, guys, that's my that's my analysis of the crypto space going forward.